All right, Berkshire Hathaway reports its third quarter results today, capping a week in which Warren Buffett made his biggest deal ever in buying Burlington. Satish Jindel, president of SJ Consulting Group, focuses on transportation stocks and joins us now to discuss the impact of the purchase of Burlington on Berkshire. And just to make it clear, you don't follow Berkshire as far as the earnings are concerned, but you do follow the railroads, and this is obviously a huge part now of Berkshire's portfolio.
That is correct.
Let's talk about then the purchase, because Warren Buffett and Berkshire Hathaway, they own more than one railroad, right? They own a number of different railroads. Why did the Oracle of Omaha pick Burlington Northern to buy?
Well, I think Burlington was appealing to them for maybe three reasons. One, they already had 20% ownership or more, which is a lot more than they had and have in UP and Norfolk Southern that they have. Secondly, Burlington is also got a great presence in the Powder River Basin, which is a very large coal deposit, and it is low sulfur and more fuel efficient. And as the country starts to pay more attention to the green initiatives, they will start to see some benefits of the coal that gets transported from there. And the third thing is that as China continues to have its high single-digit growth, it is a big importer of soybean and cotton, and BNSF will benefit from moving that to the West Coast for it to be exported to China.
Satish, let me ask you, so, when Mr. Buffett did this deal, he talked about kind of it being an endorsement of the economy, or that was certainly the takeaway from it. Is that what you think it was all about, or is it really just kind of a play on commodities here and certainly the expected increased demand from those emerging markets like China?
Well, I think there are other elements, and I should add that the rails in Burlington particularly also has a very diversified customer base. Their business is equally divided one-fourth between coal, agriculture, consumer goods, and industrial production. And through that, as the economy revitalizes, there will be new initiatives and actions in all those four areas. And as they grow, Burlington will benefit from that diversified customer base. And the other thing is in terms of our highway infrastructure, which continues to face congestion and delays. And as we try to improve those highways, there will be more detours and 3 lanes becoming 2 lanes. And at that point, the railroads with their exclusive right-of-way will have opportunity to provide a service that's as good as the trucks, and therefore gain some additional business.
Hey, would you say that Burlington was undervalued? Because we look at that chart from the year to date for Burlington. Until Warren Buffett made his offer, you didn't see a spike there, but the transports overall have outperformed, for example, the Dow or the S&P, right?
That is true. Since March, which was the low point in the stock market, the Dow Industrials are up about 51%. However, the transports are up 75%. So the transports have performed better. I would add that, you think of the premium. He's paying a 31% premium over the price that the stocks were at the time he announced the deal. When you compare that to the 2 earlier deals that were done in the railroad, when Burlington bought Santa Fe and UP bought Southern Pacific, they paid a multiple or an increase that were considerably less, in maybe 17–18% premium versus 31% he's paying. So he's paying a very good premium.
All right. Satish, we're going to leave it on that note. Thank you so much. We appreciate you breaking down that. Satish Jindel from SJ Consulting Group.